I'm joined now by Jushi Holdings Inc. founder and president Erich Mauff. Jushi is trading on NEO under the symbol JUSH.B. Hey, Erich, how are you doing?
Good. Thanks for having me on the show.
Yeah, you bet. Erich, can you give me an overview? What is Jushi Holdings up to?
You know, we're one of the U.S. multi-state operators. So we operate in 7 states. We are a predominantly retail and extraction and processing focused organization. 25 stores, 4 big extraction and processing facilities under construction, and just trying to build everything in the U.S. in what is a really relatively turbulent market at the moment.
Right. Okay, so which states are you in?
Well, we're in Virginia, where we have 1 of 5 licenses. That's a vertically integrated license. Mm-hmm. We're in Pennsylvania, where we have 15 retail locations. That's 10% of the market, which is the legal limit. We have hemp extraction and processing in New York. We have a extraction and processing in Ohio. We have 2 additional mid-state retails, which we can't discuss on this call. It's still subject to some non-disclosed information. We have extraction, processing, and cultivation in Las Vegas, and we have 4 high-profile retail locations in California.
Wow. Okay. Well, that's quite a footprint. So how did Jushi get founded? Who's behind the company? What's sort of the driving sort of ethos of Jushi?
You know, we started the company on a relatively simple thesis. We'd been starting up in Canada. One of our first investments was in Organigram. That's how we got to know Dennis Arsenault, who's actually one of the founders of Jushi.
Oh.
And as we were looking at Canada, we were pretty convinced that the U.S. market would follow a similar-ish trend. Again, the U.S. was going to be much more fragmented because of the states versus the federal system, but we anticipated that we would move over time to general consensus across the U.S. on legalization. Mm-hmm. And that it was an opportune time 2.5 years ago to start building a multi-state operator. And we really built it on kind of four beliefs. One, we were tired of being private investors and putting our hard-earned money to work supporting current license holders who themselves had put no capital at risk.
Right.
So, we would put up 90% of the capital for 30% of the equity. They'd put up 10% of the capital for 70% of the equity. Mm-hmm. And so we thought we had an opportunity to get better returns by doing it ourselves.
Sure.
We also didn't think there was an abundance of high-quality management teams, and we thought we could bring that to bear. We thought that this would be a distressed industry because of access to capital being an issue. There are a lot of things that make this to generally be a difficult market to operate in, and we thought we had the skill set, ex-distressed investment bankers, ability to really manage risk as well as to manage documentation and legislative risk. We thought we could do a really good job on that. And with the acquisition of the clinic, which is one of the oldest running cannabis operators in Colorado with some really amazing people in it, we thought that brought in the operational aspect. So if you add that all together, we felt that we had the financial backing, the M&A acumen, the risk analysis capabilities, and great operators. And we thought, put that together, you can create a really competitive, dynamic company that we think is going to have a very good long-term prognosis in the U.S.
Mm-hmm. Okay, so the focus seems to be, just looking at what you've got now, big in the Northeast, which is heavy in population. You've got California in there as well. You've got a couple of things going that you can't really talk about. So is your goal to basically operate in every state that permits cannabis?
Yeah, I think that would be a little bit ambitious. I think what we like to do is focus on the big medical-only markets on the East Coast. So we like New York, which will be reopening for applications. We like to win applications versus buy businesses. We love Pennsylvania, 5th largest population in the U.S. by state. So those are areas we'll continue to focus. We want to go deep and wide in those states. We like the Midwest. We like Illinois. We like Ohio. And then we like the big adult use markets of California, Nevada. So we like the approach of being in what is already robust adult use markets. We like to be in the emerging medical markets that we think may turn to adult use down the road. So a nice mix of the two. So not just buying long-term growth today, but investing in markets that we think will turn into incredibly lucrative markets over time.
Mm-hmm. And how do you find the competitive environment for winning licenses?
Well, we just won a very competitive license in California, in Culver City, one of 3. There were 28 applicants. We come from a long background of people in cannabis. So the clinic had a very successful applications team. And then within, investment banking, many of us have a very long history in winning competitive situations. So I think when you add the two, I think we have an incredibly thoughtful approach to how we win licenses. I think we've got the financial backing, we've got the acumen, we've got the pedigree and the people that run the organization, and then we have tremendous operating capabilities. So we feel very good about when we focus on a market we want to win in. I think we have a 50-50 shot.
Mm-hmm. Okay. Is the available license pool in places like Florida, Nevada, California, is that becoming saturated at this point in your estimation, or is there lots of room left to grow there?
So let's talk about California. That's a good one. As you know, California is in theory an unlimited license market. Mm-hmm. But according to the LA Times, in an article published about maybe 8-9 months ago, 80% of the local jurisdictions in California do not allow cannabis. Let me repeat. 80% of the local jurisdictions in California don't allow cannabis. That doesn't sound like an unlimited market to me. So let me run you through our portfolio. In San Diego, there are 30 deemed licenses in San Diego, 20 are open. The other 10 are battling to find real estate in acceptable areas. So we like that. That's a limited license market. Culver City, we're one of 3. Malibu, we're one of 2. And in Santa Barbara, we're one of 3. That to me sounds like limited license markets.
Yeah, boy, I couldn't agree with you more. I had no idea that the total area was 80%. That's astounding. So when people say California is the largest market, it's really not then.
Well, it is the largest market by definition, but it is highly regulated. Now, the number of 80% is of all jurisdictions, clearly in the high population urban areas.
Right.
Like LA, they're far less restrictive. But yeah, I mean, the NIMBY issue in the United States, it's, not in my backyard. You have a place like Malibu that votes in favor of adult use well into the 60s and 70%, and yet they ultimately want to still regulate the number of cannabis dispensaries in your town. That sounds incredibly reasonable. And so I think if you're able to be the first mover in those markets, first of all, you get the best location. And then secondly, it's going to just be a limited license market because I don't think many towns feel the need to have unlimited or 20 cannabis stores in their town. I think they look at it and say 2 or 3 feels like the right number.
Sure. Okay, well, it sounds like you've really got it figured out there, Erich. Let's leave it there for now. That's a great introduction. We'll come back to you in due course and see how you're making out. Thanks for joining me today.
Great. Thanks a lot. Really enjoyed it.